We know that we need savings. We have the open-end pension funds. We have investment fund companies. A large portion of investors lost money. Isn't it time to change something about how these TFIs, the investment fund companies, are created from your perspective? We have the decreasing shares of funds that follow a given benchmark, like the WIG index. And we have an increasing share of funds that offer the absolute rate of return or offer some kind of protection against losses. So looking at your TFI, which yesterday got a prize as the best TFI this year, are you going for the total return products? What does it look like from your perspective? Well, a lot will be happening in this respect, considering the changes in the investment industry that are taking place. And the investors perceive that in classic investment products, classic equity or even bond funds, the rates of return are simply low. If we assume that the economic growth over the next few years will not be amazing, so naturally the rate of returns in the equity market will not be very high, which, taking into account the relatively high fees, the people saving will not get a high rate of return. As a result of which, there is no inflow into funds like that. And on the other hand, investors are looking for funds that have the lowest rate of return, like ETF funds, which is not good for the market, because ETF is kind of blind money. And as a result of which, the significance of the equity selection loses importance. The money is kind of circulating, taking into account the sovereign risk, which can be seen in Poland recently. So these trends cannot be avoided even in Poland. The classic funds with these fee levels will lose importance, and these alternative investment strategies, like the classic long-short strategies, will gain importance. And we come across investors. And there are few of them long-only funds. We come across a lot of hedge funds because that's where money goes. And this trend translates into the Polish market as well. All investment funds associated with banking groups, relying on classic open-end pension funds of the last decade, lost their market shares from like 70-80% to 40-50%. And the funds offering alternative investment strategies are developing. Obviously, we should take out from this all kind of tax avoiding structures. But this trend is visible. We've opened a global macro fund offering the total rate of return program, also corporate bonds. But obviously there is a risk involved here. Not everybody, or not all the investors realize that. Some issuers can go bankrupt. We have to mitigate, we have to hedge this risk, and especially we have to remember that. And we do take care of that because credit risk is one of our basic competences. So consolidation of the market, alternative investment strategies, and this blind money associated with ETFs, these trends will continue. But as for banks, it's worth looking at the Basel III. It will have an impact on the investment market and on the bank strategies regarding raising the financing. Basel III will basically involve that banks will need more long-term funds, either deposits or long-term bonds. And as a result, there will be pressure, on the one hand, on issuing more bonds, and on the other hand, we'll be looking for investors in the local market and on the foreign markets who will be interested in such bonds. And that's the key question. Will these bond funds in Poland develop? We do need long bond maturities in Poland, which are offered now by the open-end pension funds and insurance companies. But the scale of this is still limited. We'll need 10, 15-year maturities, investment horizons. And on the other hand, on the deposit side, we will not encourage our clients to invest in money market funds. We will rather want to raise more term deposits to satisfy Basel III requirements. So if there is there will be a bigger offering of like 1 or 3 year term deposits. But we will want to offer our clients some added value funds. The alternative strategies where the risk is mitigated, maybe not so much correlated with the general market, general risk, like the total rate of return or bond funds. I don't know if you heard that PKO BP that introduces a hedge fund product, and not normal hedge fund, but the most risky fund that is global macro. I keep my fingers crossed for your success. Well, so far we've been performing very well, thanks to a very good team. And what's important here is that we perceive the investment business from a kind of from the side perspective. If it's to develop, it can't be cuddled by the bank. It has to be a separate team, separate competences, even maybe a separate brand. And we think that the market will consolidate. So that's a confirmation of the thesis that we have to go abroad. So far, we wanted the abroad to come here. Closer neighbors, further countries. Over the past few months, it brought different results. And the question is, do we still want the foreigners to come to us, or maybe we should go abroad more to look for opportunities there? Tomek, the question to you, especially in the context of performance of, among others, the Ukrainian companies last year. And will Pioneer more invest in abroad, or will you want those companies to come to us? As for the IPO, I wonder whether there is an appetite for such risk in the existing situation. Should we push for such an IPO, bearing in mind the IPO of Facebook, for example? But talking about the abroad, last year we had quite a few of these IPOs, especially from the Ukraine. And we have to say that the appetite for this country has decreased because we know what problems the Ukraine has with the current account deficit. People are wondering whether there will be a devaluation of hryvnia or not in the autumn. So the sovereign risk has increased. That's the number one factor. Number two factor is that some of the companies that went public last year or 2 years ago did not quite meet the standards required in the Polish market. And I'm talking here about accounting standards. I'm talking about the promises or the management board's forecasts, which were not delivered. And that kind of cooled down the local investors. And the third thing is that most of the companies knocking on our door for money came from the soft commodity segment. We know that this market has lost its momentum and it's not so attractive anymore. It's not as attractive as last year. Going back to the question of whether we should wait or look for things, we should look. Our team has been strengthened to include a new colleague, Adam Jenkins, who is dedicated to looking for new investment ideas in the region. But we have to say that, at least in the IPO market, it's very difficult to make money nowadays. I can give you an example of the recent IPO, the Turkish company, Teknosan. That's a chain of brown and white goods shops. It's a very nice company, very interesting, prospective, growing, but unfortunately it did not perform at the IPO, although the prospects seem to be interesting. So currently, with the level of uncertainty, both in Poland and in other markets, I think we have to be quite conservative and cautious. And even if there are nice, interesting companies, they don't deliver in terms of performance recently. And where should we look for things, for ideas? We believe that if the situation calms down a bit, because of the valuations, Russia is an interesting market, which historically trades at very low levels. And if we assume that the world will not end, it's a good time to invest there. If I may, a question to Marcin Żółtek, because we heard that foreign companies and generally IPOs are not a good idea now. So I'd like to ask a broader question. What should we do to make, especially foreign companies, interesting from the practical standpoint? Can you see any problems in the investor relations area, contacts and communication with the board and the market? Is there something to be improved here? I think that the example of last year, when we did indeed, I don't know if it's done to talk like this. You can. The IPO was held in the atmosphere of success, that we've attracted so many companies to the floor, Warsaw floor, and it was wonderful. And part of the success was the involvement of pension funds, because we could not invest anywhere. We just waited for people to come here, companies to come here and go through the dual listing process and be listed here as a domestic company. So what we saw later, luckily we've did a careful selection process. We've invested in some of the companies. We didn't invest in some of them, and you can check it looking at our assets at the end of the year. And some of them are in our portfolios because you can't exit them, basically. And there was a big disappointment, both in the quality of the companies and the gentlemen brokers, with your activities. If a company comes for a dual listing, we receive analyses, we receive forecasts, which are recalled or cancelled soon after the IPO. It doesn't seem that we are treated fairly. As for contacts with the companies, at all meetings we've emphasized that we care a lot for having the opportunity of meeting the management board, not only during the IPO. This condition has been satisfied in the case of a very limited number of companies. So it's hard for us to ask what happened, because we would have to travel all around Europe to find out. So don't the companies have investor relations people here in Poland? Do they try to manage this process from the abroad? Or is there a question of the language or cultural barrier? I think that the language barrier is the question of the past. I think it's the lack of awareness that such relations